For contributing to an HSA, is there an income limit like there is with contributing to retirement plans? I've got that detail and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so the HSA, Health Savings Account, is such a valuable and versatile tool for your finances. And as there is likely going to be higher taxes in the future, and I'm not just talking about, well, they might change tax rates or whatever, but new taxes, I think, will be more and more of a thing, or changing some of the tax rules so that more tax is applied in different situations. The HSA goes from a, well, maybe I'll just contribute to it how much I think I might spend on medical expenses, or really what's the difference between an HSA and an FSA? It doesn't really matter, to, I'm going to fund this thing as much as I can each and every year, and maybe invest it and try not to touch it. Okay, it's just a huge planning tool for you to save up for your financial future, have financial independence, and do so in a really tax efficient way. And so work with your certified financial planner on how the HSA should be used in your financial life. The big question though is, are you eligible? And the question for today is, are there income limits? Are there income limits to be able to be eligible to contribute to an HSA, a health savings account? For IRAs, Roth IRAs, there is an income limit. Is there for HSA? We'll get to that. But take a look at this, okay? This is directly from the IRS website. Talks about 2022 income limit, so sort of helping you plan there. But for an IRA, if you're single and you have a retirement plan available to you through work, not if you are contributing to that retirement plan, if you have it available, then you can still contribute to an IRA and deduct it if your adjusted gross income is below $68,000. If it's above that but below $78,000, you can do partial. If it's above $78,000, you can't make a deductible IRA contribution. Can you still make a contribution? Yes, you can. You just can't deduct it, okay? And then that makes it muddy within your IRA. Talk to your CFP on that. That's single. If you're married filing jointly, you can see those income limits there. $109,000, you can still contribute and deduct. Over $129,000, you cannot. Again, this is adjusted gross income. Real quick, what if you have a retirement plan, but your spouse doesn't? Okay, your spouse does not. Well, then that income limit is even higher for your spouse to contribute to an IRA and deduct it. And then what if you don't have a 401k or retirement plan available to you or your spouse at all through your employers? How much? What's the income limit for an IRA for deducting an IRA contribution? There is none. You can make $1 million. If you don't have a 401k available to you, you can contribute and still deduct it. Okay. Income limits like that also exist for the Roth IRA. Check this out. Those income limits are higher in order to be contributing to a Roth IRA. Again, you're not going to get that deduction. It's going to go in taxable. It just grows tax-free. So what is it? Up to $204,000 married filing jointly, you can still contribute to a Roth IRA. That's adjusted gross income. Over 214 or between 204 and 214, it's limited. Over 214, you can't do it. If you're married filing separately, just assume you can't fund a Roth. Okay, that's sort of how it works. So for retirement plans, there's income limits in order to be able to contribute to an IRA or to a Roth IRA. I know we're going to talk about the HSA here, but there's also income limits for the IRA and Roth IRA based on having too little income as well. So I talked just a moment ago about making too much, having too much income. And by the way, that's adjusted gross income. Said that now for the third time, because that's your paycheck money, that's your earned income, but it's also capital gains. It's also Roth conversions. It's also unemployment. It's all of that stuff baked in. Those are the income limits that apply there. Now, on the flip side though, there's a minimum. You've got to make at least some money, some paycheck money, some earned income to contribute to an IRA or a Roth. Technically, the income or the contribution limit for an IRA and a Roth IRA is you can contribute 100% of your earned income, that's paycheck money, up to $6,000 or up to $7,000, including that catch-up. Okay, so you've got to at least have some earned income in order to contribute to an IRA, contribute to a Roth IRA. So if you're retired, not making any money, can you contribute to an IRA? No, you can't. You've got to have some paycheck money. Check out this link. I'm including it below. Just a helpful resource if you want to see, well, does my income qualify for making for making an IRA or Roth IRA contribution? In some cases, alimony does. Self-employed income does. Typically, for the average person, I would say paycheck money. That's what we would call it. You've got to have some paycheck money. You've got to have paycheck money in order to contribute to an IRA or a Roth IRA. All right, so it all boils down to this. This is the question for the video today: is does the HSA have same limits? I mean, I think intuitively we would say, well, yeah, it sort of operates like a 401k, operates like an IRA, that sort of thing. So I'm assuming you can't make too much and you've got to make something. No, there's no income limitation for eligibility for an HSA. There isn't. You could make $1 gazillion. What, this year, Elon Musk, what, he sold $18 billion of stock? Yeah, he could fund an HSA if he wanted. Or what about when you're retired? You don't have any earned income. Can you contribute to an HSA? Sure, there's no income limit, okay? What eligibility limit is there? All right, now this is the key. The eligibility limit, or the eligibility for an HSA, is do you have a qualifying or an HSA eligible high deductible health plan? Okay, that is the distinguishing feature. If you do, great, you can contribute. If you don't, then you cannot contribute to an HSA, okay? And high deductible isn't a relative term. It might feel high, right? No, it's got to be qualifying. It's got to be HSA eligible, and it will tell you. If you're looking for health insurance on the marketplace, healthcare.gov, you're going to see lots of high deductibles, okay? But you've got to look to see, is this HSA qualified? Is it HSA eligible? And if so, if it's an HSA eligible or qualifying high deductible health plan, then you can choose to contribute to an HSA. The other feature you've got to consider, or the other component you've got to consider, is you can't have any other health insurance. If you look and say, well, my spouse's health insurance is really low deductible, okay, so let me join that. And then I've got a high deductible health plan, HSA eligible through my company, so I'll grab that too. And we'll basically use my spouse's health insurance because it's got low deductible, but because I've got an HSA over here, I'll be able to contribute to the high deductible, to the HSA. No, doesn't work. That doesn't work. You can't have any other health insurance. That's one of the other determining factors as to whether you can actually contribute to a health savings account. So I went the long road to hopefully help you understand those income limits and whatever for IRAs and Roth, but just then contrast the difference with the HSA. This is confusing. Lots of people are confused thinking there's an eligibility, an income eligibility limit with the HSA, and there is not. So the question though is, are you eligible? But then if you have that qualifying high deductible health plan, it's really how much should you be contributing? And then should you save it or should you invest it? Should you spend it or should you invest it? Those are the questions, and that's a financial planning question. Okay, you've got good choices. The question is which one is great. Your CFP, doing comprehensive financial planning, can help guide you through that process. So work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com, that's Korhorn with the K, wisemoneyshow.com, you can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.